Hi, my name is JD Morrow. I'm with Luna Lending, and this video is just meant to be a resource for you to talk about breaking down the affordability process with loans and how we can help your clients or you figure out some affordable home products. It's really hard right now with how high rates are, and so I thought I would just give you a little resource for that. Some definitions that you're going to need to really understand this process. One is debt to income. So that's the ratio between how much debt you have and how much income you have. Those could be either front end or back end ratios. The area median income. So this is literally just the median income per your area. We have all kinds of resources to help you figure out what that is. So if you want to know if you meet that, you can just reach out to me and I'll help you with that. The mortgage insurance premium. FHA mortgages require the borrower to carry mortgage insurance, and so that is an additional cost that has to be put into your debt ratios. Private mortgage insurance, same thing, but for conventional loans. And then sometimes we're going to talk about loan to value, and that's how much the home has in value as opposed to how much you've put down. So let's say that you're putting 3.5% down. Your loan to value would be 97.5, or 20% down would be an 80% loan to value. One thing that's important here is that a lot of people think that they have to have 20% down, and you absolutely don't. And people also think that the 20% down loan is like the creme de la creme, the best loan you could possibly get, and it has the lowest cost. And that's actually not true either. So a lot of times those 5%, 3.5% down, those loans could be cheaper as far as mortgage insurance and other costs associated with the loan. So there's two things you have to have when you come to the closing table. You have to have down payment and your closing cost, and they're different. So down payment is the amount that you pay towards the price of the home that's not financed within the original mortgage. And then closing costs, those are going to be all of your fees, taxes, administrative expenses, all of that you are required to finalize the purchase. You will get all of this estimated way before you get there so that you have some knowledge about what those closing costs are going to be. So when people ask me about down payment assistance, oftentimes down payment assistance will pay a little bit of the closing costs, but not all. And a lot of times down payment assistance also requires at least 1% of the loan to be coming out of pocket from the borrower. So there's really very few 100% down payment and closing cost down payment assistance programs. So before we get started, there's like three aspects to the mortgage application. One is your credit. And so that's going to impact your affordability because what your credit is determines your interest rate. And so obviously that might increase your monthly payment. What your income is, and then your assets. So we ask for what kind of money you have in the bank or that you can get access to so that we can verify your ability to pay that down payment and those closing costs. And so that's one of the things that we'll discuss about this is like, how do you prove that maybe or get some of that so that you don't have to, so that you can actually get approved for the loan. Earnest money, that's another aspect of this that you will have to think ahead of time. A lot of times it's about 1% of the total loan. So like if you're doing a $500,000 house, it could be anywhere from $5,000 to $10,000 down. So it's 1% minimum usually. And this is just the way that the buyer shows that they have some skin in the game. So right as soon as you get the contract accepted, that seller is going to ask that some of that money be taken to title in the form of a earnest money deposit. This will be transferred to your closing costs and down payment at closing. So, and then, it's your real estate agent's and mine job to make sure that we meet all of the deadlines so that that money is protected. So before we get started on down payment assistance or any other program, there's really no such thing as free money. So even though down payment assistance might be a grant or be forgivable, like a second mortgage that's forgivable, they often come with higher rates, additional closing fees, and there's a lot more hoops to jump through when you get down payment assistance. One thing about the closing costs is if it's a second mortgage, you will actually have to pay the title fees on 2 mortgages. So there will be some extra closing cost even though you have down payment assistance. So really there's no such thing as free money. Over the long run, it would be way better if you could figure out a different way to use to find down payment assistance to use a 401k or a gift or something like that, because really, though, truly, that's going to cost you a lot more money in the long run to get that down payment assistance, even in just the consideration of the rate. They're also harder to get accepted on the real estate side. So, when sellers are looking at competing offers, they often want to make sure that the offer is strong, and the down payment assistance offer can sometimes be a weaker offer. So, let's go back one. Maybe not. Okay, well, there's three aspects of down payment or of affordability. One is that if you don't have enough money for your down payment, then you need down payment assistance. You need to maybe use FHA, Home Ready, Home Possible. Those are both FHA products as well. That allows you to bring 3% down or 3.5% down. You could also use your Roth IRA, your 401k. Some life insurance products will allow you to use the money as a down payment. So there's a lot of ways that you can help with the down payment assistance part of it. The next step is going to be, okay, I'm having a hard time with just the total cost of the home. Like, I just need a lower priced home. That would help you with your monthly payment as well as your down payment. There are affordable home programs, and I'll talk to you a little bit about those. They tend to be typically really hard to qualify for. There's kind of a sweet spot with as far as how much income you have, what your debt to income ratios are, what your credit score is, all of those things, and you're competing with multiple people to be approved for that, and it's sometimes a lottery, so you don't even really you can't compete for the homes. The last thing that you might want to think about is, how do I qualify for a payment? And I just can't qualify for as much as I want. I suggest that you consider a property ladder in that regard. So, like, if you were to buy a $250,000 house right now, live in it for a few years, then you could take the equity that you build in that house and put it towards a bigger house. And so it's just a delay of that dream home for a couple of years while you let your home build equity so that you have a stronger down payment and you can have a stronger price point in a few years. And who knows, if your whole income and credit profile improves, maybe you could use that as a rental or something like that, or a short-term rental, who knows. So there's things like that you can do. But you also just really want to use affordable products. So, like, FHA is what we call an affordable loan product, meaning the affordability of the home goes up because you have less requirement for down payment. So, like, going from 20, 10, 5%, you can actually get into these homes for 3.5% and sometimes 3%. So the first program that is really popular in Colorado is called CHFA. No income or investment properties can be used with these products. You can use a 2 to 4 unit properties as long as you live in one. You can't use a second home, non-warrantable condos, co-ops, nothing exceeding 50 acres. There's no buy downs allowed. And rates are typically 1 to 1.5% higher than non-CHFA rate loans. And the process of getting those loans approved often takes a couple more weeks. And that can be something that sellers don't like. They don't want a contract that's going to take longer. So, just a thought on that CHFA. They are great programs, and sometimes you just really need that. There's all kinds of things that CHFA does. Some of it's a grant, some of it's a silent second. If that's something you're interested in, we should reach out so we can talk about the specifics. Another thing you could do if you just don't have that down payment is get a seller concession. These typically work when houses have been on the market for a while and the seller is getting a little more encouraged to accept maybe not the perfect offer. And so the seller concession, typically the offer is over list price and you ask for a seller concession back. You can only ask for closing costs. It doesn't go towards your down payment. So it just really relieves only one side of that thing that you have to bring to closing. So you can't put it towards down payment, but you can put it towards seller closing or towards your closing costs. Lots of affordable housing programs out there. So if it's like the total price of the house is my problem, you could use Denver Housing Authority's housing stability product. It must be under 30% of all of your income. So there's a lot of restrictions on all of these programs, all of the affordable housing programs. They're really looking for that sweet spot with the right buyer. Metro down payment assistance. This again is a 3-year forgivable loan with 0% interest. So if you sell within 3 years, you're going to have to pay that back. There's some, again, the area has to be approved by Metro DPA. There are some maps, and I can help you with those. Your income can only be up to $174,700, and you must have a 640 credit score. All right. Then they have a social equity program. So this is in an area that was redlined from a specific point of time, and I have a map and all of this. If you're interested in the Metro DPA social equity program, they will give you a $15,000 to $25,000 down payment assistance. Boulder has permanently affordable homes. Again, there are different requirements. You must have a $2,000 down payment, even though they're going to give you some other down payment, and the debt to income has to be under 42% with 1 year of work history. Boulder H2O, this is for market rate homes, not the permanently affordable homes. There's no payments for 15 years. It's up to $100,000. First come, first served. You have to work in the city of Boulder for at least 1 year, take the home buyer class, and you have to still contribute $2,000 towards it. G-Hope, same thing for Greeley. This would be for up to $4,000 of the purchase price. Anything east of 11th Avenue, up to $6,000 if the purchase price is east of 8th Avenue. And so there's a lot of little tricks to this one. There's limits to the location that you can be approved for. So really you would just need to look into that and see if the property and you would be approved for it. Boulder County has specific down payment assistance, just like Metro DPA. Metro can be used in Boulder, but Boulder County has their own version of this. So this could be anywhere in Boulder County, not just Boulder, Longmont, Lafayette, all those other places. And again, there's a lot of requirements for this. It's a 3% interest paid back over 10 years. It must be your sole residence. There's an application process, and again, there's some household income requirements. So FHA. So this is kind of the starting place for affordability for everybody. So if you're trying to qualify and you're having a hard time qualifying, FHA is going to be one of the better ones. The lower your credit score, the higher the down payment a lot of times. And it has to be your primary residence. Even if you have a 4-unit place, you have to live in one of them. So there's some easy qualifying. You can qualify as low as $580, but again, a lot of lenders are going to require more down payment at that level. And your debt to income ratios are going to be a little easier to meet on FHA. So 3.5% down. FHA also has Home Ready, Home Possible. Those are going to be a little less. So they're going to be 3% instead of that 3.5%. And again, there's a lot of different restrictions for both of those. All right, so let's talk about this. Instead of using down payment assistance, how can I get a great loan and not have to pay all those fees? One would be to take some money out of your 401k. Again, I'm not a financial advisor, but if you want to look into that, I would contact them. So for example, this was one of the financial advisors I talked to. They said that once an account is at $2,222.22, a loan of $1,000 can be taken out. So it's about 45% of your total balance, and the funds are received in about 2 days. There's no tax implications. You're basically borrowing money from yourself, and this eligibility again is based on the specific 401k and the employer. So I would talk to your financial advisor on that. Same thing with Roth IRAs. This is a deduction, not a loan. So this would be any money that you put into that was income on the IRA without a tax penalty. So you can take money out of your Roth IRAs. You can also get gifts. This would be a gift from somebody that you know. A lot of programs require that it's a family member. So you want to look into that before just getting a gift. Definitely talk to your lender. They have to give you the money in advance. It has to be in your bank account. We have to show where it comes from, and they have to write a gift letter often that says that it's truly a gift and not a loan. And then you can qualify with that down payment assistance from a family member and in the form of a gift. USDA, like this is a great program because it's truly zero down payment. So you can get 100% financing. The issues with this one are the debt to income ratios are really low. So you have to have very low debt. Your income must not exceed 115% of the median household income. It has to be a primary residence. And there's a map, of course, where these qualify. VA loans are also great. I love that we have this product. So it's a loan for a vet. So your down payment is based then on your eligibility, but there's no, there's only the funding fee. So there's not a whole lot of other closing costs that go with this, and they have very low interest rates. You will want to get your eligibility letter. We can also look those up, but if you're interested in that, it's a great product, and it has a lot lower closing costs, and the down payment can be zero. So it's great. Right now we have a 1% down, and I'm not really calling this a 1% down because it's not going to be 1% for anyone in Colorado. It's truly a $4,000 grant. So it's either if you have less than a $200,000 purchase that it would be 1%, 1% of that, but you would have to pay. But really, it's going to be about $4,000 in a grant to most people in Colorado. You have to contribute still 1%, even if it's under $200,000. Your income must be below 80% of the AMI. This really follows the FHA Home Possible guidelines, even though it's a conventional. It's 30-year fixed, and there's some mortgage premiums associated with it. You could also check with your employer if they have down payment assistance. So CU Boulder has one. I believe the city of Greeley has some for different workplaces in Greeley. I think Excel has some down payment assistance or some things that they can work with their employees to help them get into homes. But really, in the end, which lender you use matters because the rate is king. It's still going to be it's going to impact all three of those areas, what your down payment is, what your monthly payment is, and what your true affordability is for your total price. So really at Luna Lending, we pride ourselves on having the best rates in the industry. We are a small independent brokerage. We have very low costs. We keep our costs low so we don't have to transfer those costs over to our clients. Like we don't have a VP of parking spaces or, anything like that. We don't have a director of fun, any of those kind of things that a lot of the larger corporations have. We just don't have those expenses. And so we're able to keep our costs down and we transfer those savings over to our clients. So I'd love to help you. My contact information will be included with this. So again, my name is JD Morrow. My phone number is 720-833-1527. I am at JD at Luna Lending, JADI at lunalending.com is my email address. And my Colorado NMLS is 1005-31271, and my national NMLS is 2237482. So if you have any questions, please reach out. I'd be happy to help you. Thank you.